Good afternoon. Today is Thursday, February the 8th, 2024. This is a continuation of yesterday's Roku trade that I created. Roku the stock, and I created an option bull put spread, which is a bullish trade, which means just as long as the stock stayed above $92, I'm guaranteed to make money on this trade before February the 9th, because February 9th is the expiration. Now I collected, you will see right here, where it says trade price is $22 or 22 cents, multiplied by 100 shares, because each contract is 100 shares. So I had collected $22 minus the commission, but we're going to forget the commission. Right now, I could keep $12 of the 22 that I collected. So that means it's about a $10 difference. So what I'm going to do is I'm going to close out this trade. Because why? By closing out this trade, I'm going to try to keep as much of it as I can. Wait a minute, sell put vertical? No, that doesn't make sense. No, I'm supposed to be able to buy it. So clear trade. Give me a second. Sorry. That's the trade I'm looking to do right here. Sorry. Buy put vertical. That's what I want to do. I want to buy back the contracts that I've sold yesterday. Submit. It's working on it. So let's see. And I'm closing out this trade because why? I don't want the stock to potentially move against me tomorrow, and then I end up losing the profits that I did make. And so the goal is not to collect every dime that you collect. The goal is to get at least 50% or more of what you collected, close trade out, and move to the next trade. Because it's only about a few dollars remaining in it anyway that's left in this position. Okay, right now mid price is 9. Okay, let's see what happens. I'm just waiting for it to fill. Once it fills, I'm going to look for potentially the next trade. Let me see if I can find something in Baidu. BIDU. I'm going to do it for 1 day, see if I can collect. Oh, this is another 1 day, $1 trade, $1 wide strikes. Not much. Let me see, $2 and move $2 today. It's down $2. So $2 further down is this here. Let me see. Let me see if what I would get on this. Now I'm not in a position to make the trade right now because the other position didn't close. But the net collateral about $15. Okay, let me see if I can do a little better. We go to my watch list. DKNG. Let's see. This is a 50-cent wide strike. So this works too. Now I can do 2 contracts of these, but look at the expected move. See, it's like about $1, or really not even $1, 50 cent in either direction. Now, so that means its implied volatility is 49.7. Let me see. I could. It's at 4301. Let me see if I do 4250. Let me see. collect about $10 here, $13. Nah, I can do a little better than that, I believe. AMD. I'm a big fan of AMD. Let's see. I don't think they have dollar-wide strikes for me. They don't. Let's see what. $2.37. No, that won't work. I'm just trying to find a good trade that I might, try to do here. Let's see TQQ. TQQQ. This also has 50-cent wide strikes. There's nothing here. GILD. Let's see what they're having. I'm trying to see. You know what? Let me do it this way instead of that one. High option value. Let's see what they have here. I might be able to find something here that I can work with. Let me see Para. Oh no, 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 no. Let's see what ARM does. If they're giving me anything to work with. Okay, now this is something I can work with. Okay. Wow. Look at this. $45 and change. Ooh, this moved. Look at the IV rank, 165, and the IV percentage, 200 implied volatility. Wow. So what this is saying is that this stock can move $10 in either direction. It's already moved $45 in either direction. I mean, up. So this is a high volatile stock. I might play this stock once the other stock clears, the other position clear. ARM, because there's something I can work with. But look at the premiums though. I got to take more risk, which I'm not necessarily comfortable with. Let me see, 114. But I could collect $28 for one day, but this is within the expected move. Let me see. It must have been earnings that came out today. That's probably why. Oh, because earnings came out yesterday. That's why the premiums are so high. That makes sense. Let me see next week's. See how the implied volatility drops for next week. I mean, I might still be able to get something really good. No, because see, this is only about $6 difference. Okay, Roku, what's happening? This position hasn't closed yet. I'm waiting for this position to officially close. Still working. Let's see if I replace this. So instead of 9 cents, I'll buy it for 11 cents. So I keep 11 of the 22 that's about 50%. Okay, that one worked. So now, so I just had to adjust it, take a little less or keep a little less, but it's okay. I kept about 50% of what I collected. So that's okay. Okay, let's see. So I filled, right, so it filled at 11 cents, which is fine. So I collected originally 22 cents and I kept 11 cents of the 22. So I kept about half of what I collected, and that's fine. I wish I would have liked to have gotten more, but that's okay. It's a successful trade. No, $11. It's not much, but if you had an expense or a bill that was around $10, $11, you just paid for that. And that's the good thing about what I'm doing. Now let me go to trade. Let me go to ARM, ARM, ARM Holdings. And let's do for still tomorrow. Let me see if I could. I'm going to take a little shot here in hopes that it doesn't go too far down. So I'm going to do it within the expected earnings. I'm going to try to get $34 out of this trade or $38. This is going to be a 1-day trade, depending what happens tomorrow. Let me see. I'm risking $69 to make 31. No, you know what, Jermaine? No, let's be safer. I want to do a probability in the money. That means in the money, what is the likelihood that it's going to go inside the strike that I pick? Now, here, I'm going to do $14 for 1 day. A 1-day trade for $14. Max is 86. Max loss is 86. So I'm risking $85 to make about 15, which is fine. See this probability POP, which is probability of profit. So I have an 81% chance of making at least $1. That's all that means. Um, so I like the odds on that. But what I might do, these are $5 wide strikes. So never mind. I was going to do the other side. But No, I just do the one side here. So what I'll do is I execute this trade. So like they say, don't get greedy. Sell one, confirm one ARM, ARM, sell one put vertical. Now again, they had earnings, so that means that's why the stock shot up $45 today off earnings. So I'm and remember, it's expecting like a $10 move to win in one day. So that means even if you subtract $10 from 122, it gives you to what? 112, which is still above that 109. So that means it would have to move past the expected earnings for me to lose or potentially lose on this trade. I'm gonna take but I plan on making some adjustments. So $15. So I'm gonna keep about almost 13 of it. It's 1 day trade. So good, that got filled. So now let's see how ARM turns out for me tomorrow. Again, this is a 1 day trade. So rather than staying ROKU, which I could have, to try to collect another $10, $11, I'm going to get a little bit more on this trade. So I'm going to get at least I'm collecting 14. Now on this, since tomorrow is expiration day, if the stock is moving in my favor, I plan on just letting it expire worthless and keeping the full $14 credit that I collected. If it starts moving against me, I got to make some adjustments. So that's what that means. So that's all that means. And again, why am I doing things like this? Because first of all, this is another income stream. So just like real estate, um, I like the idea of the stock market and creating what I call cash flow in this case. Because why? Um, when your account is going up, obviously I need to put more money in, but I'm just showing you what I can do with $100. So with $100, I could, grow my account. It grows at a slow pace, but eventually it'll get bigger. It adds up. You get profit after profit. And the thing is, you want to get to a point where you could use the income from this to pay for your expenses. And then you could just load up and take the income you make on your job, you throw it into this. And if you can, if you trade very well, it can take care of your expenses. Therefore, let the market, and this is what is called the market, the options market, the stock market, let it pay for your expenses. That's the smart way to do this. Why are you paying for your expenses out of your pocket, the money that you are earning? No, let the market pay for your expenses. So that's the best way to do it. And that's the reason why I'm doing what I'm doing. And I enjoy the stock market because why? I can create instant cash, instant income if you do it properly. Now, again, it's all about doing things properly. Um, I could take some risks. I could take some risk, but why do that? You know, Here, especially when you only got a little bit of money to work with, you can't afford to take so many risks, because you're not trying to blow up your account. But what you're trying to do is, make some steady income. And I'm just showing you what I can do with a little bit of money. Now, imagine if you had a lot more money, you could, instead of making only 14 cents or $14, multiply by 100, you do this like multiple contracts. Now, instead of one contract, you're doing two contracts. Two contracts is now, instead of $14, it's $28. See how that adds up? And then you could do I can do multiple symbols, arm and then another symbol. But let me see. So I got about so let me see what I did here. So this is so yeah. So now that you see exactly what it is that I do. Um I'm going to keep you updated on how this trade turns out. Okay? Have a good day. Oh, and if you like what I'm showing you, please like, hit the thumbs up, subscribe. I'll probably end up creating a separate channel for my trading channel rather than, having trading and sports and politics all within the same channel. I might end up creating a separate channel. But in the meantime, at least like and subscribe and comment and let me know, what you think, if you like what you're seeing. Have a good day.